recording is on. All right, so we can kind of discuss what I was talking about, or pretty much the trades that I took this past 2 weeks. And there's pretty much 3 trades. One was a break even, 2 were wins. Let me go ahead and find them really quick. Positions. Hold up. I don't know why this is. Okay. So 2 trades were here. Just to note, there were two sets were here, and then the last trade was Wednesday. Or was it yesterday? I think it was yesterday. No. Yeah, it was here. Yep. 1, 2. That was the EU trade from Wednesday. As far as trade from yesterday. Yep, it was right there. All right, cool. We can discuss. Well, I'll do the AU at the end. That was the best one. But pretty much today we can go over my trades from the past 2 weeks, and then from there, I'll discuss something about models, something to see, just to see where you guys are at with that, and then go from there. Oh yes, and then there was this other AU trade. This one I didn't trade, but I did kind of watch it live and make the setup. I'll show you guys what I was thinking on that one too. So it's for, as for current EU trade, I was technically bullish. Oh, hold up, let me mute everybody. Right, we're good. As far as where we were directionally, what I was kind of a bit confused about was kind of seeing where we are going to go from just an overall higher time frame perspective. Obviously from a swing / position, we are technically bearish. However, because of the major intraday being internal, then technically the major intraday was still bullish at this time. Excuse me. So at the moment, I know that my major intraday is technically bullish, right? And that is very clearly stated with the high momentum move from the 15th, which was, I believe, last week. Yeah, last week or something like that, or 2 weeks ago. But just because of the high momentum and just where we were on Wednesday, I was technically bullish from a major intraday, but I do understand that from a higher time frame perspective, I was technically bearish, right? And that's for, you know, your daily plus, your swing plus. So what I was looking at here, obviously we can analyze our structure. Obviously, once the high is solidified based on a CBOS, right? High into low, to retracement, into low, into retracement, into low. So this is technically, right, the pullback itself, right? The way that I was understanding this was I was kind of seeing a preliminary break here. The preliminary break here could have been a sign of potential continuation, and we could have interpreted this as here we can kind of skyrocket from there. But unfortunately, that was not the case. And because we do get the CBOS in the opposing direction immediately afterwards, I interpreted that as a structural disruption, which is why, as you can see here, I was technically bearish at the beginning of the session, because as of what was given to me based on that, If we go into our M5, if we go just solely off of the structural disruption, this is where the session starts. Just going solely off of that, excuse me, I was kind of anticipating the order flow to continue. I believe here, yes, we were here right just before the session started, and as soon as the session started, I kind of interpreted this now as an internal structural disruption. We didn't get the full order flow disruption until after my entry, but at the moment I was kind of interpreting this into this as a scalp structural disruption, which is hence why I had the POI marked right here. And that kind of was what I was looking for in terms of a perimeter, with this being my entry and with my SL obviously being at the high here. So at the moment, I was technically still bearish. Oh, what am I looking for? Yeah, so that was my validation. This was my initial setup here, there being a short position, and I was hoping for this to kind of just melt from here, just because we had two correlating structural disruptions, one from a scalp and one from a major intraday stance. However, we still have to consider that our major is technically still bullish. So because of where this is at the moment, right, I was kind of looking at this to be my break-even point. Why? Because this is the last time that I noted a low turn into a high, and if we are bearish, then if this low is to be taken, the final low from that created the final bullish structural range, then if that substantially breaks, then realistically we are looking at this to 100% collapse. But unfortunately, that's not what happened, right? And I got my break even after the break even was set there, that being here. Excuse me. So as soon as we came back into our POI, I kind of changed my entire stance, and this was more of a hunch, I would say, than a 100%, like just a straight up confirmation. Because if you guys recall, this was a news event right here. This move right here, that was a news event. Therefore, I was interpreting the news event, okay, as a pretty big rejection, which kind of confirms my initial theory that this is going to continue lower. But as soon as that wick begins to get filled, right, I kind of just switch over my bias completely. Why? Because we did not create a substantial new low. We created a very strong reaction, and that is now being taken away. So if I was to essentially look for the counter direction, then I'm now kind of aligning myself with the major intraday. And not to mention, we have an unsubstantial new low, and we kind of already had the confirmations be shown for us to be bearish, at least for a medium term. So once those confirmations are no longer being essentially carried by the order flow, and by that I just mean that we aren't taking the low substantially, then it shows that we are not going to go in that direction. So just the simple explanation would be to look for the counter and try to go from there. And obviously after that, we actually got an even bigger confirmation, because here we actually had the order flow disruption. I'll show you that right now. Right, so we then had the order flow disruption as soon as that happened. So even though the invalidation was not met, I did have a stronger confirmation as to why I should take this POI right here, which is the one that we showed. And this is one of those, another one of those examples where like you need to use the invalidation. Like there is an invalidation for it's for a reason. Because we know that there's three things that can happen in a POI, and that is 1, the open, 2, the 50%, 3, we could 100% fill or even have a liquidity grab of the POI without invalidating it. Because for example here, if we want to correlate the same concept to a structural sense, then look, on paper, this is a break of structure. That's a break of structure on paper because we broke structure. But once we start to implement more of like the behavior side of things, which therefore being the unsubstantial new lows and highs, then that's more of like an intuitive thing that, oh, if we break a low but we don't substantially break it, then the sustainability of that move is a lot smaller. So that's kind of like the same thing with POIs, is that sometimes you may break a POI, but that does not necessarily mean that it's going to completely change the direction. So here in this example, right, it actually tapped the end of the POI, but my SL was at the invalidation. And that's why I use the SL as the invalidation, because I know that unless my invalidation is hit, then as long as I'm directionally right, I'm at least going to get a break even. And that's why I think it's a very big thing, because it really increases your hit rate so much just by making such a small adjustment. Because now if I can get the direction right and I can put my invalidations in place, then the odds of me losing are a lot smaller in theory. But once you start to apply it, you notice that the only losses that you take are the losses that you pretty much had everything wrong, or at least some big components, because the biggest components therefore being your entry, your management, and your exit. So if you don't get the timing right with that, then obviously no invalidation is going to save you from bad timing. But I just think this small adjustment can make a very big difference, because as you can see from this trade, right, yes, I took a break even, but here, this was the original target was at the intraday high being up here. And that's already a 7-to-1, right, with a very, very textbook type of scenario, therefore being the order flow disruption into the higher time frame continuation. But that eventually peaked at, I think, like 1 to 10. Yeah, 1 to 10-ish, but I took it up until the 1 to 7, and then just like that, I'm out. As for the second EU scenario, this was yesterday, I believe. Yeah, this was yesterday. And kind of what I interpreted here is, we know that we've already taken the liquidity, that being the high of the trade of my buy position trade. We already took the liquidity there, but we know that from a swing perspective, we are still 100% bearish. So I would more so really like to see a bearish conversion, because the potential is very, very high. You know what I mean? This would be a realistic target if we are looking at the continuation from the overall scheme. That's a lot of potential, I'm sorry. And that does not necessarily mean that you have to hold a swing for this entire time. That's not what I'm saying. But if you pick your opportunities, then you can really get some very nice trades that get pretty big, long, big candles in a very short amount of time. And we'll see that with AU in a bit. But here with EU, the reason why I took this is, if I was to still be quote unquote swing trading from a higher perspective or a grand scheme, right, and I'm trying to swing every position, then I would look for a hedge if I see a transitional curve. So let's say if theoretically I was still in this buy position, which obviously I'm not, but let's say that we are to see a very clear break of structure here. And hold on, let me change this up. So we see very clear change in structure, very, very clear. And not to mention, you could say that there is a variant of structural disruption, solely because you see the confirmed reaction based on a low into high, into retracement, confirmed reaction that is then taken out, which creates the internal structural range that we talked about here. See, so obviously low into high, into retracement, confirmed CBOS, that. So once that begins the conversion, then I can obviously create a new structural range, and then this is where we take our parameter. So I actually took my parameter, I believe it was right here. And the reason why I didn't take this trade is only because I didn't like how big my SL would have been, even if I wouldn't have used my invalidation. Because on paper, if I was to use my invalidation and follow the rules to the T here, then you know, this is a 13 pip SL and it's a 10 pip at the max. And, you know, and my first target is barely 1 to 2, right? But either way, this was kind of my scenario. It was post, I kind of want to classify it as structural disruption. It kind of is, at least from a scalp minor intraday stance, but this, you know, ended up just melting after that, you know, and this is what I'm kind of sad I didn't take. But even with that 9 pip SL, you could see that if you gather a big move, then it's still a pretty big profitable trade, you know what I mean? This is a 1 to 14 in 19 hours, you know? So if you're holding full volume, that's well over 10% in a day, and that's, you know, it's a lot, you know, that's a lot. But yeah, this, my target would have obviously been previous low after the transition, being TP1 here, TP2 here. But either way, that, in my opinion, I thought that was a very good trade. That kind of just melted over last night of London. But then, so yeah, that's that for that. One break even, one good trade, and then one missed trade. That's kind of that, all that for that. And then AUDUSD. This one was kind of trade of the week. I thought this one was just very, very good. The reason why I was bearish, at least from a overall sense, was because I think whatever I just deleted, I don't know if you guys remember. I think we talked about that 2 weeks ago when it was June 9th. Yeah, we were around here and we were kind of going into that POI, and how I didn't really think, at least I'm assuming that I didn't really think that this would be a sustainable POI. However, we did mention that we had a higher time frame POI, that being obviously the weekly POI, and then you could even see that this ended up coming into the wick of interest there. But I'm gonna just do that for my clarity purposes. But the original idea has kind of, you know, came into fruition that we talked about back then, that being the POI shown there. But because we had that reaction here, right? So if I'm looking at my structure here, then I know that there's a CBOS, so I know that my entire range then becomes here to here, and it's confirmed by the CBOS. However, because I'm seeing the structural disruption in play, this is structural disruption here, where we have the confirmed reaction, low into high, into retracement. Because we see that confirmed reaction, that is then taken out. And then this is here another example of structural disruption. Structural disruption has been shown. You come into a premium, and now the order flow is bearish in my opinion. So because from here, we start the big move or the big collapse into the downside, that being up until here, because we have a CBOS right here. So we have CBOS, and so now how I see this, I don't see this as the pullback starting and, you know, kind of just trying to give me a move into the upside, especially because we just took out the biggest leg that created the move into the big POI that we talked about. We've already taken that out, so I'm gonna leave that as a red line. So this is very, very important, because not only has the order flow switched, okay, I'll do this with this. Not only has the order flow switched, but the structure has now shifted as well. So I am 100% bearish. So if I see a CBOS here, that's all that it is. It is a CBOS. I don't care what kind of structural level this is, because the order flow and the structure is already converted, then I'm going to stick to that. So whenever I see CBOS and then I see another CBOS, that being right here, then I am 100% again bearish, right? So I could interpret that as an LG. I guess I could even on paper say it's like an LG continuation, which I'll talk a bit more about. I'll talk a bit more about that after this trade. But after I saw that LG unsubstantial high, I kind of just want to go with that continuation. And if you guys have been on here for a while, you guys, I don't know if you guys remember Dom, but Dom used to always talk about something like this where I believe it's, you see the CBOS and you're supposed to immediately look for the continuation, or if you are in a downtrend, then if you see the CBOS, then you're realistically still supposed to look for the continuation. And that has kind of stood its ground over the past couple of months. And it's something that even I use in my personal stuff. And that kind of just correlates to the whole continuation over reversal mindset. And that's kind of where my headspace was at this time. So my scenario, I decided to make this super easy and clean. I really like seeing, right, and I don't know if you guys pick up on this tendency, but I really like to see a wick take out a previous candle. That kind of just shows the whole ideology behind an SC and being shown in play, which is kind of the same thing to what we saw with the weekly wick here. You can see very clearly there's the wick is being taken out there, which eventually leads to a potential point of interest, and you can see that point of interest playing out. That's kind of like the same ideology that I'm trying to use here. So in the 15-minute, my trade, based on what I showed you guys, let me see if I could find it. It was yesterday. Yep, just show it to you guys real quick. Okay, so this was, no, this is EURUSD, sorry. This was my AU trade today, just because of what I had just talked about with the overall structural direction and then the internal continuation LG. So that was kind of where that was. That's where that was, and then this was my scenario here. I wanted to make it quick and easy. I could have, I'm pretty sure I could have, I actually haven't gone back, but I'm pretty sure I could have made this SO a lot smaller. Yeah, I could have, and that was right here. So this time around, I used the solidified point as my invalidation, just because that solidified point, you could technically argue that the solidified point here is creating an internal structural disruption. I don't want to keep using the same term over and over again, but that's kind of how I interpreted this, because we do see POI and then you see the wicks being taken out, which could be considered reactions, and then that creates a high into low CBOS, and then here's the continuation. That's kind of how that could be interpreted for why I use the solidified point as the invalidation point. But this could have been a monster trade if I would have just taken the M5 POI, because either way the invalidation is the same. So we'll do a comparison for both, but this was my position. And here is my theoretical best case position that would have been there. And as you can see, the collapse has kind of just begun. This, I do see this kind of just rolling over the next couple of months. But here, my first TP was obviously the 1-6, right? And it could have been a 1-25 already. And this could, you know, this is obviously, in my opinion, this is still gonna collapse. But this is kind of just what my scenario was for the week. And yeah, that goes for that. Break even, I'm still 50-50 on whether I consider break even a loss, just because even though you don't take a monetary loss outside of commission, you do waste your time. Waste is maybe a bad term, but time is being expended with these types of things, you know. So one break even, one very good trade with AU, two very good trades with EU. And that kind of just summarizes my 2 weeks. I didn't take many trades last week. I don't think I saw anything last week. But that kind of just concludes that for today. Do you guys have any questions and concerns with these scenarios? Right, I don't know if you guys have noticed, but I've really kind of just switched over a lot. I've sacrificed a lot of the high RR stuff in order for me to keep winning. Because I know that if I keep winning, then, you know, the only way is up. If I'm not losing, then I'm not losing money, so I'm gaining money. So even if it's less money at a time, it's still gaining money over time. And I'm more so becoming less of a day trader, more of a decade trader. I want to make sure that in a couple of years, this type of model is sustainable, and that I'm not just, you know, picking lows, picking highs, looking for the high RR, and sacrificing a lot of other key components which revolve around your risk. So that's kind of just where I'm at today. I don't know if you guys have any questions or concerns with that. But yeah, I'll let you guys type out any questions if you have any. Any questions, concerns with the trades, guys? Pretty clear, thanks, cool. Any questions with that? Anybody else? Cool, no questions with that. I guess I do have a question, is how many models are you guys trading individually? That's just my one question for today. We could get into the models I use. Let's see, I'm gonna wait for somebody to answer that. What kind of models are you guys trading today as of right now? Okay. Intraday continuation. Yep, it does. So I technically have 4. Range, identify point, take structure, what's solidified points? Yeah, cool, because I can show you guys. I'll just type them out. All right, my 4 models. Let me see what order I should put them in. Catalog. Because obviously you guys know the two original models were order flow disruption, structural disruption, and then there's obviously the OFC. So I'm gonna actually type these out. I'm gonna put this one at the end. Okay, so you guys know what a order flow disruption is. It's a failed POI. Structure disruption is a failed continuation based on structure. And LG continuation, that's kind of like this. That's kind of what this is right here, is liquidity grab continuation, because obviously like we said before, the order flow and the structure had already changed. So now this is just a liquidity grab that essentially is giving us the continuation towards the downside because the original direction was down. So a bullish to bearish LG in a bearish scenario is a liquidity grab continuation. That's kind of where that is. And I consider that this, I guess I could call this a failed retracement. Yeah, I don't know why that's not being spelled right. And then the order flow continuation. So an order flow continuation is also kind of what the scenario is, because an order flow continuation, I would realistically, if I see the LG here and the LG here, then my scenario is technically here. This is my order flow, my liquidity grab continuation, this entire perimeter right here. But if I miss the initial scenario, then the continuation, that being either here or here or here, these immediate continuations after the completion of a model, that's what I call order flow continuation. So an order flow continuation does not stand alone. The first three stand alone because they are each individual scenarios that are kind of different. They're similar in certain aspects, but they're different. Whereas the order flow continuation is 100% dependent on seeing one of these occur first. And the reason why I did that is because I know that if I trade 3 days a week and I have this amount of models, then I will have a minimum of one scenario per week without a doubt, 100%. If I do not have that, then I kind of cannot trade, right? Obviously, if I don't have a model in place, then I cannot trade. So if I put myself in a position where I have a solid amount of models that makes sense, then I know that if I trade 3 days a week, especially the 3 busiest days of the week, then I should be able to get a scenario per day. Per week, at least one. So it's kind of just the mindset around there. Yeah. I don't know if you guys have any questions in regards to that. Does anybody have any questions to that? So that's pretty much all I have for today, guys. Any questions regarding that, guys? Did I record the Zoom? Of course I did. All good for you. Going to do some back testing. Yep. So, yep. All the model is a sequence. excuse me. Models are not based on structural levels. Models can be applied to each and every one. You guys saw me use structural disruption on a weekly basis and on a 2-minute basis. Look, if you're confused about models, so models are its own thing. There's a couple of things that, like I said, matter within your entire trading style. It's one, it is what you're trading. Obviously, that's the trading plan. And obviously how you're trading it, that's the models. But in terms of the trading itself, you need to know how to build a bias and you need to know how to build a model. Because your bias tells you what direction you're looking for and your model tells you how to take advantage of the candles within that bias, if that makes sense. I could have worded that better, I'm sorry. But two things matter, your bias and your models. If you can essentially predict the direction, all you need to do is find a continuation based on the models that you're using. And if you could do that, then you could find consistency. But now, if you only have like one model per se, then there's going to be a lot of days where you kind of don't get any trades. You don't get any scenarios at all. It could even go by 2 to 3 weeks. If you, just depending on the type of model, how experienced you are and stuff like that. So a lot of people get kind of discouraged when their models aren't occurring on a daily basis. And I'm like, who the fuck told you it was supposed to occur on a daily basis? So I think that would be more of like an expectations problem. Is it better to use? Well, bro, most of my trades are continuations. I don't know if I haven't made that clear. You can backtest everything that I've shown you guys over the past couple of months. For the majority of the time, all of them are continuations. But I don't think it's also a bit too easy for me to say that they are all continuations, because it's very, very hard to, or not hard, but it's very, very rare to have your swing, major, minor, scalp, and micro all align and then still be able to create a model, or still be able to show you a model when all the levels are technically aligned. Because in order for order flow disruption to occur, you need a POI to break, right? A POI that's obviously already been mitigated, you need that to break. But in order for that to break, there has to be a shift, at least from the internal structural sense. There has to be a shift there, which means that even if your major and your scalp might be aligned, your minor intraday will not be aligned, because that was necessary in order for the model to come into fruition. Does that make sense? So by continuation, I kind of more so mean that the overall sense is I have certain levels of structure aligned, but not all of them. And now the magic question would be, what structural levels should be aligned in order for you to get a favorable trade? Well, that's kind of just 100% dependent on you. Just depends on how often you're trading, what types of trades you're looking for, right? Because as if you notice, I kind of stay away from the micro stuff these days. I just think it's, I don't know, I'd rather just, instead of being 100% perfect, I'd rather be just directionally right. So it's kind of, I just focus on being directionally right and then just looking for a continuation based on the models. Because if I can do that, then I'm sure I can, be way more efficient with my wins and losses. And it's made a difference. Excuse me. But yeah. Yeah, like the EU trade. This is AU. This isn't EU, I'm sorry. But yeah, does that make sense? I hope I'm being, semi-clear with that. Cool, but does anybody have any more questions? Because that's kind of it for me for today, guys. Went over everything I wanted to go over. Yep, I know I have a have a couple of journals I have to get to right now. I'll try to do those right now. I do have some free time right now, but other than that, I've kind of just been looking through the chat. For the people wondering, I only look at the chat Tuesday through Thursday, which is when I trade. Other than that, I don't really pay much attention to it outside of the weekends and DMs, of course. But yeah, I kind of do stay true to what we talked about yesterday with I kind of block out everything, everybody, every trader, every style. I don't care for it. It doesn't impact my life, you know? Wait. Yo, can you guys hear me? Hey guys, can you guys hear me? Hello? 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 Fucking OBS. Let me see. Can't hear. Hello? No. Speaker. No, there. Hello? Yeah, I don't know what's going on. This is so irritating. Hello? Yeah, I'm gonna just end the recording here, guys. That's fine.